anybody who's an equity investor is thinking. The smartest are also thinking about pledging, that is pledging gold or pledging property and anything else to make that quick buck from the markets. Does it make sense to pledge and invest when markets, of course, are very attractive and cheap? Let's approach this financially, psychologically, behaviorally. Markets started correcting from September 2024, almost 18 months now. And do you know where does the market stand from there? In 18 months, the markets are down 12%. Interest to be paid towards the jewel loan is lakh and 35,000 rupees, and your investment of 10 lakhs is down 12%. That is, the current value is only 8.8 lakhs. What is the net loss in this total activity? 1.2 lakhs, which is the capital loss, and also 1.35 lakhs of interest. So the overall loss is 2.55 lakhs.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The markets are down almost 10% in India since the beginning of the war, that is in the month of March. 1 month down 10%, market is very cheap, valuations are very attractive. So how all can we quickly make money from this market? Which are all the smart ways to make money in the market? This is what anybody who's an equity investor is thinking. The smartest are also thinking about pledging, that is pledging gold or pledging property and anything else to make that quick buck from the markets. Does it make sense to pledge and invest when markets, of course, are very attractive and cheap? Let's approach this financially, psychologically, behaviorally, and give you answers to this question. Financially, you may think the market is down 10%. Once the de-escalation happens, and if it is happening soon, a 10% recovery is going to be immediate. So if you invest now, you are going to make a 10% gain in a month or less than that. It's true in case market move as per your prediction. Now let's go a little back. Market started correcting from September 2024, almost 18 months now. And do you know where does the market stand from there? In 18 months, the markets are down 12%. So let's take a case of somebody who pledged and invested 10 lakh of rupees in the markets, pledging gold. The interest on jewel loan is somewhere between 8.5 to 9%. For calculation purposes, let's take 9%. So for 10 lakh pledged for a year, the interest is 9%, which is 90,000 rupees. And now 1.5 years, that is 18 months are over. For 18 months, the interest to be paid towards the jewel loan is lakh and 35,000 rupees. Okay. So 18 months, lakh and 35,000 rupees of interest paid, and your investment of 10 lakhs is down 12%. That is, the current value is only 8.8 lakhs. What is the net loss in this total activity? 1.2 lakhs, which is the capital loss, and also 1.35 lakhs of interest. So the overall loss is 2.55 lakhs, which means it's literally like your 10 lakh becoming 7.45 lakhs. A drop of almost 25.5%. Is it small? Not at all. Did anybody think market is going to take this long and after 18 months you will be on negative? And did anybody have any clue in the month of February that the war, that's the West Asia war, is about to start? Absolutely no. So markets can be uncertain. It may completely behave against your calculations, for that matter, anybody's calculations. And for all these reasons, it's completely not advisable to pledge and invest. Let's give more reasons to this. At any point of time, the rate at which you can borrow is at least 2% or more than a FD. At the current moment, our interest rate is at 6.5%. And add 2% to that, 8.5% is the rate at which you can pledge your jewelry. What is the expectation of returns from equities? That is again long term, not a 1 year or a 2 year return. The 5 year plus return on a long term basis is about 11-12% annualized. Let's take 12% annualized. You one side are borrowing for 8.5%. On the other hand, you have a 12% return. 12% return gets reduced by the tax, which is 12.5%. So what you make after the taxes is about 10.6%. You have this 10.6% annualized return. The probability of that being achieved is when you invest for a long term of 5 years. Psychologically, as we said, the recent history, that is the last 18 months return, which is negative 12%, you definitely don't have the mindset to think about another 3.5 years, and you are very restless because your last 1.5 year return and the loss in terms of the interest is huge. What is that you lose? Your peace of mind, your sleep. You probably may be able to make the 12% return at the end of 5 years. There's a good chance. But can you have sleepless nights for another 3.5 years or even 1 year? Chances are very low. Most often, investors, particularly when they have pledged paying an interest towards it, you definitely don't have the temperament or patience to ignore your interest loss and capital loss and wait for that 5 year to come to see this double-digit return. Is anything important or paramount than your peace of mind? Nothing at all. Peace of mind means health is the most important thing, and the gamble sometimes may work, but there is also 15-20% probability that your 5 year returns also can be flat, right? So when that is the case, please don't take chances pledging and investing. Now I am going to tell you a little more difficult to digest situation. Do you know where the markets are today? The markets today, the Nifty is at a level it was in May 2024, almost 2 years. 2 years returns flat. Had you pledged 10 lakh rupees, 9% interest, 1.8 lakhs of 2 year interest paid, and your money is where it started, not moved. So we have practical examples of the last 18 months and 24 months in front of you. Don't ever think about borrowing and investing. However attractive the market may look, however good the opportunity in front of you in the markets may be, you never have a clue that while you have an opportunity which is seen, which is very bright, another geopolitical tension which can come before that or in the course of that is something which you cannot rule out. So predictabilities are much lower than the unpredictabilities that can come in the market. The market history of the last many decades has given so many examples for that, and I don't think we need any past example as our most recent example which is fresh in our mind is good enough. So please stay away from pledging and investing, and mind you, your interest rates are always going to be 2% more than your risk-free rate. That's not cheap. So you are not borrowing cheap, and borrowing at whatever rate, even at your interest-free rate, which is even at your risk-free rate, which is 6.5%, is not cheap. And after pledging even for 4 or 5%, for some reason you get the loan from somebody at even 4 or 5%, you will not have a peace of mind until you see your capital back, and not only your capital plus the interest covered. That sometimes may take as long as it has taken in the last 2 years. So actually even the interest rate, whether it is 8% or 4%, doesn't matter. Psychologically, behaviorally, you will be restless because you cannot see negative returns. Particularly, even if you are having your capital back, you are still at a loss because there is an interest. So net you are still at a loss. So humans behaviorally are not tuned, programmed, designed to take such kind of scenarios, which can be a very long no return period and a very high negative return, or a long negative return period, particularly when the money is invested borrowing. So peace of mind is more important than the anticipation of a higher return, as peace of mind may be tested and will be tested until your return is equal to the capital plus the interest rate at least, and your real return starts from that. So the wait can be very long. The verdict is very, very clear. Never borrow and invest. Borrowing and investing may become a sibling of trading. It's close to as dangerous as that. Never try this. Don't think you are attempting to do something smart that may backfire and actually give you a big blow which you never imagined.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.